Nordic hedge funds lost 0.9% on average in October, ending a 6-month streak of positive returns. The Nordic Hedge Index, NHX, remains up 1.8% year-to-date through the end of October. All 5 sub-strategies in the NHX posted losses for the month. CTAs, equity, and multi-strategy hedge funds led the losses, whereas fixed income hedge funds edged down by 0.1%. Fixed income vehicles, one of the 2 strategy groups in positive territory for the year, advanced 2.4% in the first 10 months of 2020. Equity hedge funds fell by 1.3% on average in October, trimming the group's year-to-date advance to 5%. CTAs and multi-strategy hedge funds were down by a similar 1.3%. Funds of hedge funds, meanwhile, were down 0.4% in October. In October, the top 20% of Nordic hedge funds advanced 1.9%, while the bottom 20% lost 3.7% on average. Only 1 in 4 members of the NHX reported gains. Among the top-performing funds in October were St. Petri Longshort, Proxy Renewable Energy, and RPM Galaxy. Let's hear from the managers what their main performance drivers were.
October was one of the relatively strongest months on record for us. We also passed 100% returns since launching less than 2 years ago, so quite happy about that. The beginning of October was a very strong month, especially from solar and wind. We attribute that to a long-term story developing around China 2060 vision and also the expectation that Joe Biden was going to win the US election. We actually did sell into that strength and did quite a lot of sector rotation as we saw the valuation of several of our holdings getting a little bit excessive. And that is also in the end of the month that created the relative value as the market actually started to drop towards the last two weeks.
Greetings from Stockholm, Sweden. In October, the RPM Galaxy Fund was up 7.0% in the Euro share class. This was a welcome relief, bringing year-to-date performance to -9%. The best performing sector for the underlying managers was European fixed income. But the manager also profited from US dollar weakness. Minor losses occurred from being long the indices.
If we look at the thematic exposure and the contribution to performance, most of it came from themes related to online retail and areas within green energy transition and sustainability related themes. In both areas, we have currently slightly more than 20% net exposure.
So both sides contributed positively to the month performance. The short book was up approximately 2%, whereas the long book was 3 times as strong.
Looking at absolute returns does not always tell the whole story in the hedge fund space. In fact, it seldom does. Funds and strategies often drive in different gears or have very different volatility and return targets. This table shows the performance of Nordic managers in relation to their typical monthly standard deviations, looking for those funds with the highest returns per unit of volatility. Which funds in absolute terms may not be competing with the top performers, but based on their own standard deviation, had an unusually good month. While the top spots go to the top performers, funds such as Scandinavian Credit Fund, Polar Multi-Asset, Sector Healthcare, and Firma Nord Market Neutral, among others, stick out in this ranking.
Keep up to date on the Nordic hedge fund universe on nhx.hedgenordic.com and do subscribe to Hedge Nordic's YouTube channel.